Hi, everybody, and welcome back to Tax Sale Insiders. I am Rachel Seidensticker, the COO of Tax Sale Resources. And of course, I'm here with our CEO, Brian Seidensticker. Hey, Brian, welcome back.
Hi, Rachel. Well, thank you. Hi, everybody.
Yeah, it's good to be back. Good to circle back up. We've got a big state ahead of us today. I think it's a pretty popular state across most investing divisions between deed sales and lien sales because it does have both and is a pretty active market for both of those different business types. So it'll be great to, I think, dig in and get your knowledge on the state and kind of what Tyler versus Hennepin means for Florida. We're going to dig into a lot of things today. So buckle up, Brian.
Florida. Sounds awesome.
Yeah, Florida, indeed. All right. So the big thing is just starting with the breaking down the state of Florida and the tax sale process. We've touched on it. There's a lien sale process. There's a deed sale process. So capture that for investors so they can understand that a little bit more.
Yeah, I think most of the time investors assume Florida is a lien state, but in reality, it actually has both liens and deeds. There's actually quite a few folks would say that's the model of how many other states would work. I think there's just enough people that would disagree with that statement, but it definitely has a process that allows tax lien investors to be successful as well as tax deed investors to be successful.
Okay. So I guess let's break it down. As far as the lien sales are concerned, what's that process first? Because that's the first part of how a delinquency is collected, correct?
Yes. Yeah.
Okay.
So you're exactly right. So, the delinquencies that exist, the Florida's statutes allow them to have a tax lien sale. Now, I think almost every county, you might know this more than I, Rachel, there might be one exception or two that have live auctions, but most of them use online auctions, and there's 2 or 3 platforms that are utilized throughout Florida. And basically they sell those liens through what's called a bid down method. So it starts at 18%. It's bid down electronically. A lot of times you put in your lowest bid and everybody puts that in, and there's multiple people that you can bid down to 0.25%. That's the lowest. And then if there's multiple people that have bid 0.25%, it does a random selection. So that's kind of how the sale process works. Now, the nuance in Florida is what we refer to as single simultaneous bidder rules. And it varies a bit each year, but it's basically split 50-50-ish, right? And half the counties allow multiple bidders, and half the counties require single bidder status. And what that means, that's a whole lot of jargon, but what that means is there was a time when if you had an EIN, that's all you needed was an EIN to bid or to create a bidder, I should say, on these auction sites. There was also a time when you could, somebody clever enough, I don't know who, but somebody clever enough created a script and actually created hundreds of thousands of EINs. And so why does that matter? Well, if you think of everybody bidding down to 0.25%, if you happen to own 100,000 EINs, then your piece of that pool, right, your chance of getting selected is exponentially higher than some guy that has one in there, right? And so there was an enormous advantage to having that many EINs. Now, some things have happened since then. The IRS doesn't allow you to do that, and so nobody will ever be able to generate that many EINs again. But then there was different legislation proposed, and basically it's like kind of a stalemate where half the counties allow that to continue. So the folks that have that many EINs, and there's a whole fledgling industry of people that rent the EINs out, and that's a whole crazy thing. But half the counties allow that to happen, and half the counties that don't, right? And so typically folks that are active or want to get active in Florida that don't have the luxury of having that many EINs, they typically avoid the counties where the process allows all of those EINs to participate, and the counties require basically every bidder. So you as an individual or you as a company, doesn't matter how many sub entities, etc., that you create, you can only have one bidding ID, right? And so you're on equal footing with every other investor in those counties. So anyway, that to continue, that's kind of how the bidding process works in Florida. And then the way the interest works is even if you bid down to 0.25%, and this is why people would do it, there's a whole model called the Fast Five, because you get a 5% penalty. So even if that lien redeems the next day, you get 5% on that. And so people are kind of betting that you can get that Fast Five. If you can get things to redeem in that first month, it's a very good annualized return. And there's actually some pretty good data that we have access to that helps folks, target those that are more likely to redeem sooner rather than later. But it's a very long answer, but I think dives into how the tax lien process works in Florida. Did I miss anything?
Well, touching on some of the finer points, like what is the redemption period, for example, on that, and just kind of, going over those types of things. I think it was great to give them the SSBR, as we call it. Yes, SSBR versus multi-bidder. It's also known as bidding groups. So that's one way that they use a terminology. And we're seeing more and more counties go to following the SSBR, meaning that they're single bidder. I couldn't give you a percentage because we're doing that research right now, but more and more are going that direction. So it's probably more 60-40 than 50-50 at this point.
Okay. Yes. As far as the way the redemption process works, so Florida, like many states, the liens do have an expiration. So you can't just buy a lien and sit on it forever collecting whatever interest. So if you happen to be a lucky one that bought a lien 10 years ago when the chance of getting certain liens at 18% with no competition was a little more likely, great for you at the time. Unfortunately, there's a 7-year lifespan on that lien. There's exceptions to this with, bankruptcy and so forth. But in general, the liens in Florida have a 7-year lifespan. So if you ever are presented the opportunity to buy tax liens that are more than 7 years old in Florida, run the other direction for the most part. Again, there's a few rare exceptions, but typically those liens are now worthless because they're not enforceable. So now my legalese might be a little fuzzy on this, and so I'd recommend talking to an attorney, but there may be the ability to still maybe earn the interest if it happens to redeem, but the reality is you can't enforce that, meaning you can't file for a TDA. And so I'll dive into what do I mean by TDA? It's tax deed application. And so you have up to 7 years you can do it. You have to wait at least 22 months before you can file for a TDA in Florida. So roughly 2 years from the lien sale, right, before you can start the tax deed application. And basically the tax deed application starts the process that culminates in the tax deed auction. So that's the difference between the two. Now, I've certainly fielded questions in the past of, well, I can just buy the lien and I'll end up the real estate. In reality, that's almost non-existent in Florida, especially today. And that's because Florida is what I call efficient. There's enough people bidding at the tax deed auctions that any piece of property of value is being bought by somebody. And if somebody buys at the tax deed auction, the lien holder doesn't have any chance to take ownership. And so that's basically the nuance in Florida is there's no ability to take ownership just by owning the lien in Florida. And quite frankly, I think that's good. That's a better situation overall. It's actually also why they're not having to deal with Tyler versus Hennepin fallout, right? Because it satisfies the Tyler Hennepin decision. The process in Florida does, that is. But anyway, so I'm gonna shift off of the lien. Or is there anything else on the lien process I'm forgetting right before I dive
No,
into
I think you touched on a lot of the pros. I guess before you move on to deed sales, any cons with the Florida tax and just for terminology's sake, a lot of the counties call it tax certificate sales. But any cons that you can think of for the Florida lien collection process? Sounds like
I think
counties are iffy, but
yeah, I mean, good question, because it certainly has been more apparent, especially in the last few years with higher interest rates, right? Is there's that fast five, which when interest rates are under 5, then everyone gets excited about that, right? Because then even if I bid down to 0.25%, if it redeems a year from now, I can still cover, like if you're using borrowed funds, right? You can still cover your cost of capital. In today's world, right? I think the cost of capital is somewhere, everyone's varies, but let's say somewhere between 7.5 to 9.5 range there. Even if that lien redeems a year from the time you bought it, right, and you use borrowed capital, you're upside down in that. And that is, I'd say, the downside in Florida is because of them all being online, because of the volume, because of the competition in Florida for liens, that bidding a 0.25% isn't always beneficial. And so you've kind of got two models right now in Florida working. One is, and then I guess this will dive back into the lien process. One is betting or targeting the liens that are going to redeem very quickly, right? And so you make your fast 5% quickly, right? So you can be in and out, right? And then you got to go find something else to do with that capital. But at least you didn't have a whole lot of cost to it. You made your 5%, you made your spread, you move on, right? That's one model. And the other one is because there's when you look at the redemption curve, right? When stuff redeems in Florida, there's a lot that redeem early, and then there's a lot that redeem toward the TDA, right? And in the middle, it's kind of a no man's land, right? And so, you either make your interest at the beginning on the Fast 5 model, or a nuance of the TDA process, the tax deed application process, is when you apply for that as a lien holder, you also have to pay for all the other open liens on that particular property or open taxes. The positive, so it's more capital required. Now, the positive of that is you actually start earning 18% on all of that amount from the time that you file your TDA. So the other model is around trying to buy those that are going to make it to TDA. You roll those up, and then you can make 18% on that, and now all of a sudden you can make a decent return. But there's a whole lot of waiting involved in doing it. But just with the cost of capital it is today, that's really the two main models that exist on the lien side of things.
No, I think it's important to note for sure. Okay, well, I know you've touched on it, but we can, I think, move fully into that, the TDA process, or what happens once you file TDA, what happens in that deed sale process specifically. Right. Yeah.
So I think the main thing to keep in mind here is that the tax deed application is just the county basically doing the foreclosure, right? And so call it a tax deed application, but it's the county does a title search, they do notifications, right? And that all culminates in the sale of that property. Now, at the tax deed auctions is where you're now buying the property in Florida. Now, because it's they call it an administrative process and not a judicial process, right? There's notifications that are done, right? People are notified. Theoretically, mortgages are eliminated, etc. There's always the caveat of as long as they were notified. But because it's not a judicial process, you don't get title insurance from that sale, right? And so that's one thing for real estate investors, right? Tax deed investors in Florida to know, right? Is as you're going to that auction, getting title insurance is you have to go through a separate quiet title action or a title certification in order to get that title insurance after the sale. And actually, there's a third. I don't know how widely this is used in Florida, but there's a third model or third process of I think it's 2 years that you can wait in Florida. And if you wait that 2 years, then you have insurable title as well.
After you filed your TDA, then you sit on it for 2 years, basically, or
after you buy that deed. After you buy that deed at auction, right, you can wait 2 years from that time that you purchase that deed till you have insurable title. There's really, from a lien holder's standpoint, you file the TDA, which requires more capital, right? And then you wait, right? And basically, for the most part, you're waiting for somebody else to buy the deed at auction, and then the proceeds from that auction go to you, pay you off as a lien holder. That's kind of how that process works. So the requirements or what a lien holder needs to do is fairly minimal today. Now wasn't always the case. 10 years ago, the competition for the deed auctions in Florida, probably single family homes is still very competitive, but for vacant land, you could still buy vacant land really cheap, or a lot of vacant land didn't even sell at the tax deed auctions. And so for lien holders, there was a chance of it not selling at the deed auction. And then it goes into what's called list of lands, right? And then you have the ability of obtaining ownership of the lien holder, of obtaining ownership of that property, and being the lien holder, you get it out of the list of lands, right? I think there's a few more fees you got to pay to do that. But you've already paid the bulk of it by filing for the tax deed application. But that model, it may come back, right? I guess we're in 2024. But in today's world, there's so much demand for building and vacant land in Florida that anything of value is selling in Florida. And so getting something back on the list of lands of value is slim to like non-existent today anyway.
Well, I think you touch on a decent con, right, of the deed sale market in general, and Florida really in general is competition. Would you agree?
Yeah, I think in Florida you had to have a very specialized model. It's not like in some states you buy liens, right, and you're going to get a decent return. But in Florida, you got to be pretty specialized to either do the Fast Five or have the data to do the Fast Five, or data to do the tail end, TDA, 18%. Otherwise, being caught with all the redemptions in the middle is a recipe for typically losing money. So that's a big con on the lien side. On the deed side, you're exactly right. The competition is really driven a lot of markets that where even the tax deed auctions, and you're not getting title insurance, but even the tax deed auctions are, those properties are selling for right up near market value. In some cases, even higher than market value, because you have speculators thinking the value of the property is just going to keep going up. And it's a model, right? There's plenty of people that do it. Is it a model that I would recommend? Probably not.
Yeah. Any other risks that you can think of with the deed model in general and attending those deed sales? It sounds like making sure that title insurance, that's a risk, making sure you know about that, and that is an important part of going through that going through a tax certification process, which there are several companies out there that do that specifically and started because of Florida. So it's out there, but anything else?
Yeah, some of the big ones, now maybe these don't all qualify as risks, but just things to think of. One is the competition. And I can tell you that the major markets in Florida are very competitive, right? So to think you're going to go buy something at 50% of market value in Florida and Miami-Dade at the tax deed auction is non-existent. So I don't know if that's a risk, but it's something to keep in mind. On the title aspect, there's kind of two things. One is title insurance, but then there's also because it's administrative. I haven't seen these personally, but I've heard of scenarios where, the county orders title searches. The county, they have a process, and they're not doing any, like, missing things on purpose. But I've heard of the title search comes back, and there was a primary mortgage on the title search, but the secondary mortgage wasn't on that title search, and so the secondary mortgage wasn't part of the notifications. And because it wasn't part of the notifications, even though in theory mortgages are nullified in the tax deed auction, because they weren't notified, that second mortgage is still there, right? So you're now the tax deed owner, and you're actually now responsible for that secondary mortgage on that property as well, right? Which is typically a surprise to folks, because I think many folks assume that they're buying that property and it's clear for the most part. And
we're going to touch a little more later on some of the specific liens and things that travel with the Florida process, but it's good. Yeah. Good to touch on that.
So that's certainly a risk. I think the other major risks that I'm aware of on the deed side is knowing that several areas in Florida have liens, municipal liens. Let's say fines is probably better. I'll say municipal fines, because lien kind of assumes that it's going to be on the title search. Those municipal fines don't get extinguished by the tax deed auction, and they can be hefty, right? And what I mean by municipal fines is you didn't mow your lawn, right? and that mow your lawn statute might say it's $500 a day, and this has been vacant for 3 years. Now you've got, you know, a $50,000 municipal fine that's due. Now, I've heard, right, that most of the areas will work with you. For somebody that's legitimately going to come in and, you know, make that property better and put it back on the tax roll, then maybe the county will negotiate, right? I don't know if it's remove or maybe reduce that municipal fine. But you know that those don't get extinguished by the tax deduction. So you need to know what that is. The other two items that don't get extinguished are because they're superior. One is a CDD, or community development district. I think it's considered a lien. It is a lien. It should be on the title search. And so if you buy a property within a CDD, many CDDs are fine, right? But many CDDs are, you know, have issues, right? And because it doesn't get extinguished, I know this happens on vacant land, right? Within CDDs, is you've got this great piece of land on a piece of water. It looks like, you know, yeah, this is a multi-$100,000 piece of property, but the CDD, you know, has a $40,000 or $50,000 back fees due, right? And they're essentially monitoring the tax deduction, and they send a nice congratulatory letter, you know, thanks for buying this property, you know, here's the $50,000 bill that's due to us. And you kind of go, oh crap, you know, I thought I got a great property, now I'm upside down. So that's something that certainly think about. The other new one that I just recently learned about is it's called PACE loans. And PACE loans have been in the commercial world for many years, but I think there's a few states now, I think starting in California, Florida, and a couple others, that allow PACE loans on residential properties. Now, what it is well, probably a whole other episode talking about what that means, and it's not necessarily directly related to tax liens. What happens is somebody can put solar panels on their roof, right? And in theory, these all sound like great things. Put solar panels on a roof. It's not actually a loan. It actually gets added to your tax assessments, right? You don't have to pay anything out of pocket, but you've got, it sounds like some bad actors doing this in Florida, and they're not educating the homeowners on what they're doing. And in one example that county official explained was the taxes due from one individual went from a few $100s a year, because they were homestead, veteran, they had a bunch of exemptions, that now their, you know, annual tax bill is over $6,000 a year, and that person cannot afford that. Now, that's a whole separate topic, but that's also a lien that doesn't get eliminated because it's actually just increased taxes. So it's something that you can avoid, right? If you see a property that has an exorbitant amount of annual taxes compared to anything else like it, there's probably a PACE loan situation. And that property will have a, you know, in that example, I think $70,000 or $80,000 PACE loan amount due on it, right? That you're not responsible as the tax deed owner as well. So, again, I don't know that all of those are risks, but just big things to keep in mind as you look at properties in Florida.
No, I'd put them in a risk category because it's not something people always expect. You know, a lot of investors are taught that everything's extinguished, and that is not a safe statement. So,
Yep.
Yeah. Okay. Well, you touched on this, but kind of the post, what happens if nothing sells, right? It's filed for a tax deed application. It goes to deed. It doesn't sell, and then what? You know, they go into this LAS process or list of lands, and talk about that over-the-counter process if you can.
Yeah, so the list of lands, so I'm going to call that the over-the-counter deeds in Florida, right? These are all the properties that somebody bought as a lien many years ago, right? Then filed for a tax deed application and went to a tax deed auction, and then nobody bid on it, right? And then the lien holder decided that they didn't want that piece of property as well. So all of those things in mind was, you know, knowing how efficient, especially in today's world in Florida, nobody found it valuable to bid on at the auction, and the previous lien holder doesn't find it valuable enough or doesn't want to take ownership of that property today. Now, the Florida market might turn someday. There's lots of theories out there of, you know, because, you know, you can't get insurance, nobody will want to move to Florida. I don't know what's going to happen. I don't have a magic 8 ball, unfortunately. But in today's world, it's still extremely competitive. So if that many people are passing up that property on the list of lands, then it's likelihood of finding something of value there right now is slim, right? Now, that wasn't always the case. Again, 7 to 10 years ago, there was plenty of opportunities to go, find these pieces of property on lists of lands and get into them, fairly inexpensively. But I think enough people have done that they've sifted through and found everything of value that was there, right? And the quantity of new stuff of value being added is almost zero today on the OTC deeds list. Now, the OTC lien side of things in Florida is unique in the fact that there's not really a over-the-counter list of liens that you can just go buy. I guess there is in Florida, but there's kind of two parts to that, right? There's the sale that happens, and all the sales happen on the same day, and you got to put in a deposit, right? So you're not putting up all of your capital. It all depends on how much you win, but then you have to wire in or deposit the remaining amount due. And there's inevitably, Florida's, almost $700 million worth of liens that are sold annually. So it's a significant amount. So there's always inevitably several $1 million worth of liens that were good liens, but the person that bought them just didn't have enough capital, didn't deposit their remaining amount due in time, whatever the reason might be. But those liens all of a sudden that were good become available again. Now, what most counties do is they have a secondary auction, but those liens it's not truly auctioned where it's bid down like 18, 17, 16. It's a first come, first serve, right? So if you can be the first to click, I want to buy certain liens, then you get those at 18% in Florida, right? And that's one advantage of over the counter is you don't get the 0.25%, you get the 18%. And typically that's not a widely known model. I know some folks that only do that, right? But I think the main thing for folks to keep in mind is, can you buy a few $100,000 doing that? Probably, right? Are you going to buy $50 million doing that? No, right? There's not enough of that to do that. Now, inevitably, there's going to be some liens that don't get sold, and those are over the counter. You can go buy them, but again, because of the competition in Florida these days, like if it's been passed up in the main auction, right, passed up in that secondary auction, the fact that it's on an over-the-counter list in Florida doesn't mean that it's all worthless, but it is definitely going to be a process of finding needles in a haystack. And doing that one by one can be difficult at a minimum. Now, we have a custom list process, so you can get the list, right? You can send it to us. We'll do our same data aggregation like we always do. And we can at least make it easier to sift through that haystack and find those needles. But it is not an easy picking type of situation where they're, just go buy one and you make your 18%. The fact that they're there makes you got to wonder why. And so you really need to do your research on those before you buy anything.
Well, I think you actually touch on where I would like to head next, which is kind of giving investors, especially new investors, to the space. But I think even those who've been dipping a foot into Florida, just some ideas of how to be successful and maybe how we could help them be successful too. So if you want to, I think you've laid out a few ideas and touched on how that middle chunk, if you're counting on, say, the holding on, waiting for redemption and things, that middle ground, we like to call it in the business, that the middle people, that's not successful for Florida right now. But what models are working and why? Let's start there.
Well, I think the Fast 5 model, right? Targeting those with data, right? You can target those I'll call repeat offenders that are delinquent every year and seem to redeem within the first couple months every year, and you can see a trend. There's a lot of those out there, and if you're doing that in single bidder areas where you're on equal footing, you bid on enough of those, you're bound to buy some of those, right? And so the Fast 5 model is something that you can do at scale. That's one that's fairly successful still. The other one, trying to target those that are less likely to redeem. That's a harder thing to predict, right? We do have the data. It's almost opposite. Avoid those that obviously redeem quickly if that's your model, or avoid those that seem historically to redeem in that middle ground, the no man's land. Again, that's a lot harder thing to estimate. But if you can target those that are late stage, and have the capital to TDA and start earning 18%, then that model is fairly successful. And those are really the two main ones, and liens in Florida. Oh, and the third one would be that immediately after the auctions, the secondary cleanup auctions in Florida, and buying those at 18% is a good model too. So if you're in the habit of buying liens, right, or want to buy liens, and Florida is where you want to go, I'd say those are the three models I'm aware of that work. Now, obviously, those are what work, right? And the nice thing about Florida, the single bidder is you're on the equal playing ground, so you can take that model and be just as successful as the next person sitting next to you, as long as you've got the cash available. But if enough people are using that model, then somebody else has got to be more creative. And there's probably many other models out there that are successful that I'm not aware of, right? And that's also part of you as an investor, you got to create your own secret sauce.
Okay. Well, I guess how would you suggest identifying the best markets and researching tax sale properties, getting ready? We'll just say for any of it, quite frankly. But how would you go about that?
Well, on the tax lien side or tax certificate, side is, I think, the guys that are the most successful, utilize data that we have available, meaning quantity of liens available, which ones we compile, which ones are single bidder, which ones are not. So we provide that information available, and it does vary every year a little bit. We do have the lien history information. So as far as figuring out or trying to predict which ones are going to redeem faster or not, we've got that as well. So we can certainly help on the lien side, folks to be successful. On the deed side of the house, certainly there's markets that are extremely competitive, right? But there are some markets in Florida that aren't as competitive. And there's a fine balance of not as competitive, but do you still want to own property there, right? And that isn't a question that we technically answered, but we can help provide analytical data, right, to determine where are better deals being found on the deed side, right, and get real specific based on property type, because you might find great deals on vacant land in one county and not in the next, right? So depending on what you're after, we can help find the counties that aren't as crazy competitive in that particular asset class, using our market analysis tools. So anyway, we can help on both fronts.
Okay. Any particular investment models that you've seen or case studies that you've seen successful? Obviously we won't name names, but anyone doing the business right in your mind?
Well, I mean, I think on the lien side, I'm aware of folks that all three of those models, right? So those are three examples, right? The Fast Five, the late stage TDA, right? The cleanup sale approach, right? Those are all successful. On the deed side, having a very specific asset class helps, right? Because I think historically there's been several folks that have done very well buying vacant land in Florida because assessed values are low, right? They know the assessed value is $2,000, and most people doing their research online will use assessed values on vacant land, and so they won't bid more than $2,000, right? But in reality, people that are watching the actual market know that piece of land might sell for $35,000, right? And so they'll buy it at the $2,000-$3,000, and they can turn around and sell it for a higher amount. I don't know. I haven't gone in to look to see how successful that is today. I know it was very successful, 7 to 10 years ago. But I think on the vacant land side, even that's becoming pretty competitive, especially in markets. But I think if you have the tools that help you monitor multiple counties, right? This used to be a business of, you looking up, you get a list of parcels, you look them up one by one, right? Even with the auction sites today, right? You can look at them one by one, right? Which is fine, but it doesn't help you when you're trying to monitor multiple counties, right? And hundreds or thousands of properties at once, right? And so now we've got the tools to basically help folks sift through everything and say, okay, these auctions have the type of property I'm looking for, these do not, right? And then also on the analytical side, what areas are property selling for deals, which areas are not, right? We can help with that as well. So just being enabled with those tools and data can be a game changer.
Yeah, I mean, I agree. What do you, I mean, is there any way of, I mean, I feel like we could help as far as giving maybe investors additional capital and being able to give them an edge. You want to talk a bit about our refinancing or accelerator program, JV, anything like that, just to kind of go over how we could give investors a little assistance, I guess.
Yeah, well, yeah, and I won't dive into necessarily the nitty gritty of how each of the program works, but we recognized several years ago that the biggest downside for most tax deed investors, right, and they're real estate investors just buying tax deeds, but it's capital, right? Is because you don't get title insurance, you can't get standard financing for these tax deed properties, and so we've created several different products to really enable folks that. Even if you're working with a couple of $100,000, if you're buying properties in Florida, that'll get you into a property, maybe, right? Or even if you have $500,000, right, that'll get you into one good single family home or a couple. But then you got to sit, right, until that recycles. And so we put together a product that enables tax deed guys to keep buying, right? And so you're not limited by the cash that you have on hand. Right, you're not limited the fact that you can't get a standard financing from the bank because you don't have title insurance. We understand all that stuff, and so we have capital available to really enable. If you have a successful model and cash is your only drawback, then that's something that we certainly can help with and want to help with. Right, our goal is to we view tax investors as reviving communities, and if we can help in any way folks that are actively reviving communities to do that on a larger scale, we want to help you. We want to partner with you, and so if that's your only limiting factor, we want to talk to you.
Drop the mic. Good job. Perfect. How about exiting? So if you've got, a portfolio of parcels and you don't want to do the sit and wait, as you mentioned, that's one model, but you don't want to do that. Any ideas on how people can get out?
Yeah. Well, so secondary market stuff in Florida, right? And
different than the secondary sales you mentioned, right? This is like
correct. Yeah. So not the cleanup secondary sales that I mentioned. Those are held by the county. This is a secondary market is one where somebody else bought the lien at auction, right? Then now they want to sell that, and we get asked by funds every once in a while that want to sell their portfolio, and it's not a ton, right? Again, 7-10 years ago there was a lot more available in the secondary market, but today's world they happen on occasion, but it's somebody that either can't or doesn't want to wait, right? They bought their portfolio, they got their redemptions the first couple months and now they just want out, right? Or it's somebody that's halfway in and something happens on their capital side, they need to get out, right? Or there's definitely those that maybe don't have the capital to TDA, right? Because you need more cash in order to file for the tax deeds, right? So there's several different reasons people might want to sell, but then so they'll come to us and say, hey, we've got this portfolio of liens, do you know anybody that wants to buy them, right? And so for those that have liens somewhere in those categories, the fact is, like, we're not willing to just help dump something that's worthless. So can you sell an 8-year-old lien? Probably legally, yes. Are we going to help you do that? No. But if you have a portfolio that is valuable and just need help exiting that, right? Keep in mind that doesn't mean that you're going to get the redemptive value of that. That doesn't mean you're necessarily going to get your principal back, but can you sell a portfolio that has some value in there? Yes, right. But it is hard, especially with today's cost of capital, right? Selling stuff that's midstream at a premium is I've never heard of. Selling stuff at a premium right before TDA because might be some other guy out there that does have the capital to TDA that, right? Will he pay above redemptive value? Potentially, right? So if you have a portfolio of liens they're good liens, not worthless liens, and you're just looking for ways to exit that, and you just don't want to wait any longer, don't have the capital to TDA it, then that's something that we can help with.
Okay. Well, cool. Let's talk about where Florida is at today. I feel like you've talked about one of the big trends being, that gravitation where the middle guy is not seeing as much success. But any other trends? We're going to touch on Tyler versus Hennepin too, and some of those things. But any other specific trends that you think investors should note specifically?
Well, I think. Well, I'll note, right, on the lien auctions from last year, right, 2023 lien auctions, it was the first time that we saw like the average winning bid creep up above 1/4%, right?
Mm-hmm.
And so the
Kind
cost
of shocked everyone, I think, quite frankly.
there was a theory going into the auctions, right, of two theories, right? One is, it doesn't make sense to buy below 5, right? The average winning bid is going to need to hover somewhere around the cost of capital. That was one theory. The other theory was, well, it only takes one person bidding 1/4%, right? And so we're going to see the same results, everything going at 1/4%. Now, in reality, it was neither of those, and it kind of makes you befuddled. But the average didn't just flatline at 1/4% for the liens of value. It was higher than that, and so there is certainly an adjustment going there, where not as many folks are willing to bid down on all the different types of asset classes down to 1/4%. So that's interesting in Florida to me. Does that mean that you're going to win a boatload at 10%? Probably not, right? But that is something that we'll watch, in the years to come. I guess we're gonna dive into Tyler Hennepin. I mean, Florida in general is pretty, I'll say, reliable and stable. There's not a lot of changes from a statute standpoint, case law standpoint that I'm aware of today. PACE loans have come up. The cost of capital is certainly shifted things in Florida. But there's certainly many states that there's a lot of changes coming down the pipeline, and Florida is not one of those. The biggest thing to watch in Florida is just which counties are changing from single bidder or back, right, to multi-bidder one way or the other. And then typically there's, in these last few years, have been legislation to try and make one or either of those like the rule across the state, and then that creates a bunch of discussion, right, and communication around what's the right thing to do. But other than that, Florida is fairly stable.
Yeah, I was going to only comment on your 2023 data that it's definitely not 10% winnings. It's like 1.5%.
Yeah, we didn't. Yeah,
but yeah,
it's not like it jumped from 1/4 up to 7, right? Or
yeah,
like the average went from 1/4 to like 1 1/4, right? So, but Florida. That's a big shift, right?
Mm-hmm.
So it'll be interesting to watch over the coming years.
Yeah. All right. So we've teased him enough on Tyler versus Hennepin. I think short story, you said it really is safe, but you're deep in the state advocacy committee for the NTLA. Any other kind of comments you want to make as Florida's concerned?
No, I mean, I'm not an attorney, right? I should always probably start every episode, right? So, but the takeaway from the Tyler Hennepin was really this, right? Government can't keep more than what is due to them, right? And so what Tyler Hennepin, which is really a case that started in Minnesota, is not just applies to Minnesota. It was, hey, counties, if they're going to sell a property for taxes, right, they're due taxes. They can't keep above and beyond that. And so that in mind, Florida adheres to that because there's a tax deed auction that so that was one aspect of it. Now, there's certainly a lot of communication around what should happen, right? And so there's a group called Pacific Legal Group that was behind Tyler Hennepin that are fighting for property rights, and a lot of it is very good for good reason, quite frankly, in my personal opinion. But their argument was that if there's a process in place to sell that property, that process should create excess equity. If there's excess equity in the home, and that excess equity should be due to the prior owner, or then now we dig into the minutia, but maybe previous lien holders on that property, etc. And that excess equity shouldn't just be kept by the government. And so that in mind, Florida's process adheres to that, right? So there's a tax deed auction, right? There's multiple bidders. It's bid up. It creates excess equity, right? That excess equity pays off the previous lien holder. It's then made available to the prior owner if there's enough available. And so it adheres to the Tyler Hennepin. So any changes coming down the pipeline in Florida will very unlikely be due to anything related to Tyler Hennepin.
All right. It's probably good news for anyone investing there. It's less of a concern, less to have to worry about.
Yep.
All right. Well, I think legal considerations, we touched on a bit of this, but just the high level big things to note on those liens. Let's just do another recap really fast of the liens that aren't extinguished with the lien purchase, a tax certificate purchase, and deed purchase. Let's just talk about that specifically for legal considerations. Anything else you can think of on that end. And I like your caveat. You've said it a couple of times, but as always, we are not attorneys. We are here just with some knowledge, but always tap into attorney and estate before you go investing. So anyway, I'll do that caveat too.
So what? Sorry, I was entranced by the caveat that we're not an attorney. What's going again, Rachel?
Just the legal considerations. We touched on the things that don't get extinguished, but maybe just another recap of that. Anything else you can think of for investors that they need to note?
Well, yeah, certainly talk to a legal counsel familiar with tax sales in Florida, but obviously there's certainly risks associated with what is extinguished, what should be but maybe isn't extinguished on the tax deed auction. Know that on the title insurance side, you do not get title insurance. Know that there certainly are many fines and liens that exist in Florida that aren't extinguished by the tax deed auction. And so those are all things to keep in mind for sure. But as you said, and I'll repeat it for the fourth time, regarding any legal questions, reach out to an attorney that's not just familiar with real estate, but familiar with tax sales in general in Florida.
And they will exist, I promise, because it's prominent there. Well, cool. Well, I think we've covered everything I wanted to get through today. Do you have any specific takeaways for, especially a newer investor? If you're brand new to the industry, I feel like Florida is like a safe market. Tell me if you think this is a correct statement. It's a safe market, but it's a competitive and more challenging market to break into because there's so many investors there. What do you think of that statement?
Yeah, well, yeah, safe is relative, right? Is the one thing I like about, and I'll break it in the lien side. The one thing that I like about Florida, if you're a new guy, is the single bidder counties allow you to be on equal footing. So you're not, if you somewhat know what you're doing, right, you're not coming in at a disadvantage, right? There's certainly states where you have a disadvantage because the state might have all their sales in the same day, right? And so now you got to figure out a network of people, or states where you can build a code, right, or a script that does bidding for you faster than anybody else can click, right? And so Florida is fairly equal, right, from a new lien investor. On the deed side, the fact that it has sales all the time makes it appealing, right? And Florida in general, both on liens and deeds, the quantity of product makes it appealing. But all of those things do equate to the same conclusion many people have come to, and so the competition is still significant there. So is it a place where maybe I'd recommend dipping your toe just to better understand tax deeds in general? Sure. Is it the state that has the best deals in the country? I can tell you from analytics, no, right? So keep both those things in mind as you proceed forward.
Yeah. Well, great. I think we can call it. So thanks for joining us as always, and taking your years of experience, and the interviews that you've done also, I think, make a big difference. And we've worked with numerous investors in Florida through the years. So I think it's good to capture that all in one 45-minute podcast.
Yeah.
A lot more to talk about always, but thank you again for sharing your knowledge.
Absolutely. Well, good luck, everybody. And I will I probably need to start throwing this out there every time. I'm not an attorney. Things are changing rapidly. And so this was, as the time this is recorded, it's the information that we have, but always before you get started, reach out to counsel and get their 2 cents to see what maybe has changed since we recorded this. But on that, good luck, everybody. And thanks for having me, Rachel.
Thank you. And happy investing out there. Good luck. And remember that our podcast is available every second and fourth Wednesday. So we try to bring you as many new topics as we can. Thanks, and have a great day.